This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 29th, 2016. Euro dollar. So the euro has entered a period of correction since basing out in the previous week just shy of 109, and the question now is whether the market is looking to resume pressure to the top side or if it's looking to resume the downtrend that we've seen over the past several sessions, taking us lower down towards next key support at 108.23. At this point, it's going to be important to pay attention to previous support at 110.98. If the market can close back above that level, it could put the pressure back on the top side, while inability to close above that level, keeping below 110.98 on a daily close basis, will suggest that the market is poised for deeper setbacks below those recent lows that we saw in the previous week at 109.12 and towards 108.23 further down. Sterling dollar. So cable remains confined to a very intense downtrend with the market trading to plus 31-year lows this week down at 131.20 ahead of the latest minor bounce. At this point, any rally should be very well capped into some previous support in the 138 to 140 area, while ultimately only back above 140 would compromise the overall bearish outlook for this market. Dollar yen. So dollar yen has seen a bit of a bounce out from recent lows in the previous week, those 2016 lows, with the market bouncing from that 99 area all the way back above the 102 figure thus far. At this point, there is risk for the market to extend this correction higher, though ultimately it is a correction and the lower top is sought out below 106.81 in favor of the next major downside extension below 98.99. Euro Swiss. So a very impressive rally in Euro Swiss over the past few sessions, with the market having traded down to as low as 106.23, but reversing sharply back above 108 in recent trade. At this point, while the market holds above 107 on a daily close basis, the pressure could remain on the top side with a retest of 111.30, 112 range highs over the coming weeks. Really, only a close back below 107 would compromise this outlook. Aussie dollar. So Aussie has been under pressure since topping out last week at 76.47. The market could be putting in a lower top now ahead of the next major downside extension below 71.45 and towards a retest of the 2016 lows at 68.27. Dollar CAD. So dollar CAD looks to be forming some form of a medium-term base now, with the break back above 131.89 to confirm a higher low in place at 26.55, opening the next major upside extension to the 135 to 140 area. Ultimately, only back below 126.55 would compromise this constructive outlook. Kiwi dollar. So Kiwi has seen some setbacks in recent trade after pushing to a fresh 2016 high at 72.97. At this point, a break below 69.63 will officially put the pressure back on the downside, exposing 66.75 further down. SPX 500. So the S&P 500 has broken down below some critical support in recent trade at 2020, with this putting the focus now on a potential retest of those 2016 lows just shy of 1800. Look for any rallies to be very well capped ahead of 2085, with only a break back above that level to compromise the newly adopted bearish outlook for the S&P 500. Gold. So gold continues to grind higher with the market showing signs of a major base over the past several months. At this point, any setback should be very well supported ahead of 1250 in favor of the next upside extension towards a measured move objective at 1400 further up. Only back below ultimately 1200 though would compromise this newly adopted bullish outlook for gold.